Well, Kyle, let's briefly take the focus off Steinhoff for now. British American Tobacco, another stock under a lot of pressure. Exactly what's going on there?
So I think yesterday we saw Philip Morris reporting results. They missed estimates on revenue, but their EPS and the sort of EPS that they guided for was better than expected. So the whole tobacco industry really pulling back on the back of that. Philip Morris, I think, internationally closed down about 15%, and British American Tobacco followed suit. But I think just to put into context, what you are seeing in the tobacco industry, and for many years now we've seen that volumes in the tobacco business are declining. So essentially they're selling less cigarettes as people sort of become healthier. So it really is a very mature or sort of sunset industry. So I think that's always been in sort of the back of investors' mind, that they are worried that this is where the sort of industry is going. Together with that, you've got tobacco that's really transitioning from selling cigarettes to selling e-cigarettes. And I think particularly if you have to look at the US market, where Juul, I think it's Juul, is really the dominant operator there. So essentially it's been described as sort of like the iPhone of e-cigarettes. So really a premium product, and they sort of they've got about 35% market share in the US. The problem with the sort of e-cigarette industry is that it's very low margin. In fact, there's not many operators out there that are actually operating at a profit at the moment. So as the sort of industry moves away from selling cigarettes to selling sort of e-cigarettes and these new generation products, as they're called, you're seeing volumes declining, and then on top of that you've got this issue of margins that could potentially be declining. So it's really a bit of a transition period, and I think what you're seeing in in these big moves on the market in tobacco businesses is investors' concerns around that. So it's going to be interesting to see how this plays out. It's unfortunate, but I think that if you have a long-term view of British American Tobacco, they already it's a business that operates globally. 40-odd% of their revenues come from the US. Very cash generative business, so it does look fairly attractive. I think the big difference between something like a Philip Morris and Altria, which operate in the US, and these are trading at PEs of sort of 15 to 16, 17 times earnings, whereas British American Tobacco currently has a PE of around 5. It's really, from a valuation perspective, it's priced very well. Whereas something like Philip Morris, you could argue that it's the defensive sort of qualities that tobacco companies are well renowned for is sort of been eroded. So I think that's kind of already been priced into British American Tobacco from a PE sort of perspective.
Remind me again, who was it that merged with Reynolds?
So it was British American Tobacco that took a stake in Reynolds, and then they took a further stake, I think it was last year if I'm not mistaken.
Yeah, for sure.
Yeah.
So I mean, consolidation in that industry, clearly the only way to try to protect margins, you say, are already under pressure. But then what about the threat or the pressure that's always been in the industry from counterfeit cigarettes? I mean, are we seeing that subside a bit, or is that still a problem?
So I think that certainly is going to be sort of factored into the risks that investors are pricing into share prices. But at the moment, it's really the big sort of talk is NGPs and new next generation products and how they're affecting margins on the tobacco business. What we are seeing is in the US and Japan and China particularly is that these volumes are falling a lot faster than investors are really prepared for, and really moving into these next generation products, which are really taking off, which is fantastic. But again, it's really a question of margins.
Sure, that sounds like major disruption there, and particularly troubling is the fact that you say that margins from these new generation products are a lot lower than the traditional products. Why would you invest in cigarette companies then?
Well, I think if you kind of look at it objectively, they're still selling an incredible amount of cigarettes. In emerging markets, they're still selling. It's a great business. It's very profitable. But that being said, 10 years from now, and I think you can apply this to any business on the market at the moment, technology moves so quickly that businesses that you buy today for whatever reason are going to look very different in 5 or 10 years' time. So it's really just an evolution of an industry that's done particularly well for investors, but it is changing, and certainly there is a lot of disruption in there. And it's also investors just getting to grips with how to price an e-cigarette business as opposed to these high quality cigarette businesses or defensive cigarette businesses that they've generally made a huge amount of money on previously.